today. This is Audit Proof Your Business, presented by Golden Apple Agency, Inc. My name is JD. We have tax and accounting services offices in Florida, Georgia, South Carolina, and North Carolina. There's our main office number, 904-990-5050. And down at the bottom, you can see our website, goldenappleagencyinc.com. Feel free to reach out if you have any questions. And so we'll go ahead and just jump right in. So this is in preparation for the IRS, adding a bunch of new auditors and really trying to up their revenue. And so this is how you can prepare to be safe from an audit from the IRS. So just kind of going off of that, as you may have heard, that IRS just received $80 billion that they're going to be using for auditors. Now, the chances of one business being audited per year is still pretty low, but over time, in a lifetime, it adds up. And based on the statistics, everyone is likely to get audited at least once in their lifetime. So you certainly want to be prepared for when that will happen. Now, audits can be really expensive. And this is not just the money that you're going to spend, but also the amount of time that it takes to work on the audit that you wouldn't be able to, or that you would have otherwise been able to spend on something but more beneficial for you. And so this will take time away from your business for you to focus on the audit. And that is even if you hire representation, you're still going to put a decent amount of your own time into it. So we're going to go over some steps for you to take to really make sure that your business is safe from an audit. So the first step we have here is to make sure your finances are separated, and that starts with bank accounts. Now, so you want to make sure you've got your business transactions and your personal transactions completely separate. Anything that's going in one bank account, you want to be able to say, if you get audited to an auditor, hey, this bank account, every single transaction that goes through this bank account is a business transaction. I do not receive income for my business through any other, so all of my income is showing in this bank account. All of my expenses is showing on this credit card. There is no personal expenses mixed in here for you to disqualify. Everything here is what counts. The auditor will always request bank statements and credit card statements, and they will pick apart every single transaction that shows up on those statements. So do not commingle your finances. Do not pay personal expenses out of your business account. You always want to be able to say that everything on this list is business. Everything on that's personal is going to be on a different statement. So then becomes the question about how to take money out of your business. If I can't have my business spend pay my personal expenses, how do I take the money out to then pay my personal expenses? And this varies by entity. So the first most common entity is the sole proprietorship or the single member LLC. So here all net income is considered self-employment income. So to take money out, you just do a simple transfer from your business account to your personal account, and that's a-okay. That's going to be perfectly fine. You don't have to worry about any special accounting or anything like that. Just to transfer is all you need. Now for partnerships and multi-member LLCs, this is going to depend on the partnership agreement, because depending on what percentages are owned and then how guaranteed payments are set up, that's going to definitely vary depending on each partnership. So you want to make sure you double check on what those, but it's usually some form of guaranteed payment for work done. As well as just like the regular percentage for ownership percentage. Next up we have the S Corp, or just an LLC filing as an S Corp. Now this needs to first go through payroll, because of course with an S Corp, all the officers, all the owners of the business that are doing work need to be on payroll. And ideally whatever percentage or anything outside of just your regular ownership percentage that you are taking out, uh, that should be through the payroll. And then you do a shareholders distribution. But again, the shareholders distribution should then match the percentage if you have multiple owners. It should match with the percentages um, based off of the ownership percentages. And then lastly, the C Corp or an LLC filing as a C Corp. You've got payroll as well. Again, you can take dividends out, and then there's going to be the capital gains for anything else. All right, so as I kind of alluded to before, you want to designate a credit card to be your business credit card. Now, this doesn't necessarily have to be a card in the business name, especially if you're a new small business, your business doesn't have its own credit yet. You can have a card in your personal name that you just decide this card is going to be my business card. All my business transactions I'm going to put through this card. I don't need to, I'm not going to touch any personal transactions with this card, just business. This card, I'm going to put them all right here. And so in that case, again, only business expenses go on that card. So then you can know, and if it comes to it, then you've got those statements for that card, and that you're going to know every single transaction on that statement is a business transaction. All right, so that's it for step one. The next step is to make sure you've got accurate bookkeeping. Now, tax preparation is not bookkeeping. You need to have more bookkeeping than just getting your taxes done. And also, to be able to prepare a tax return and have it be an accurate tax return, accurate bookkeeping needs to be completed. All sorts of different accounting softwares out there at different prices and different levels. We have found that QuickBooks is by far the best, but it does come with a hefty price with that. But if you've got the money for it, we highly recommend QuickBooks. However, not everything is super necessary for QuickBooks. If it's a smaller business, not as many transactions going through, not as many necessities for reporting and sorting and different things. There's a few different ones. This one right here, this is Wave Accounting. We recommend it. Is free. It doesn't come with nearly as much capabilities as QuickBooks does, but for a lot of people it works well. And so, but now, no, with the softwares, any software is only as smart as what you've told it. They always make an easy just add button or an easy just like automatic like go yes. That they're always going to try and recommend a category. They're always going to try and recommend, oh, this transaction looks like another one you did that you put as this category. And if you fall into the trap of just automatically just going and just adding the way that which is the easy way that they have it set up, you're gonna lead to mistakes, you're gonna lead to messes, and you're likely gonna need a cleanup project. And cleanup projects can be more expensive to fix than just getting it done correctly the first time. And so you want to make sure that you're getting accurate bookkeeping done. All right, now if you do get to the point where you've got an IRS agent coming to audit you, here is what to say and not to say. Now, so your very first thing when you have an audit is an interview with the IRS agent. So you receive that letter, and then they try and set up that interview. And it's with the IRS agent, and most likely will be with their supervisor as well. Now, inside of this interview, it is very important to be honest. You don't want to try and hide things. They will be able to find out. So if they're asking about something, they probably already know that something is the case, and they're just asking for you to confirm it. And so you always want to you definitely don't want to get on their bad side. You always want to be willing to work with them and answer the questions they ask. They've already scouted you out. They've done all of the stalking and all the different things. They've seen your business. They've seen your house probably. They're going to be very prepared, and so you want to make sure that you're open with them and not trying to hide things. Now, on that note, you don't want to elaborate. Keep your answers very short. Answer the questions that you're asked, but don't give additional information. You don't need to. Only give them what they're asking for. Remember, if there's other things, that wait for them to come looking for it before they really before you tell them about it. It's especially in this initial interview. Now, when it comes to emotions, it's certainly okay to be emotional because audits are definitely emotional. This is them coming to tell you that you owe them a bunch more money and you're not paying them as much as they should, and you're sitting there saying, "Well, I certainly am doing everything I could. I'm doing everything right. I'm paying you what I'm supposed to." And so but you want to make sure that your answers are factual and that you don't get into just how you're feeling, what your different excuses or reasonings might be, and really don't be surprised if they're not accepting what you have for your reasons, because this is their job. They talk to people all day long about through audits, and they've heard everything. So remember, just try and keep emotions out of it. Just be factual. Just tell them, look, this is how it is. This is what that expense was. That was for business, yes. And just try and just keep the emotions out of it and just give them the facts. All right, so 3 things the IRS looks for when they audit you. So number 1 is when. So when did the event occur? They're looking on dates on receipts and invoices, making sure that you reported all of your income in the year that it occurred, making sure that a receipt from a previous year or a current year is not submitted, so that everything fits into the year or the time period that they're auditing. Now, if they can't read the date on a receipt, they're not going to allow it. So especially with these thermal printed receipts, it's very important to have a backup copy, scan the receipt in, take a picture of it on your phone, save it into Google Drive or OneDrive. Make sure you've got a digital copy of your receipts in case that as the receipts age, they fade and they make it so that they can't be read. And it also makes it a lot easier rather than having a filing cabinet or a shoebox full of receipts. It's a lot easier to have a sorted filing system inside of a drive. Next thing they're looking for is how was the transaction paid for? And this gets back into the bank accounts and the credit cards and the designated business accounts. That gives you an extra layer of paper trail that you can match the transaction to that bank statement or that credit card statement. If you're paying in cash, you need to be able to show where the cash came out of the bank account that went to it. It's not very good if you have like if somebody's paying you in cash and then it just kind of sits and you've got like a petty cash register and it just kind of sits there and never gets deposited anything, and then you just go and make payments out of it. The IRS certainly will question that, and the auditor will be less likely to accept those kind of expenses because of not having that extra paper trail. And so always recommend with dealing with cash, always deposit the income you get with cash into the bank account. And then if you need to pay expenses with cash, then go ahead and withdraw what you're going to be paying so that you can point to and have exactly where the transaction occurred inside of the accounts on the statements as well. And then as a side note, if you're purchasing something from Facebook Marketplace or something similar like that, because you're not going to get a receipt from them, but if you've got a conversation where you agreed to make the purchase and the price, you can just screenshot that and that works just fine as a receipt for that transaction. Last thing they're looking for is the what. What was purchased? What was sold? What services or products do you sell? They want to see your invoices, sales receipts, amounts, and descriptions on them. They want to make sure that what you're reporting on your taxes is reasonable compared to the amount of clients that you have. They want to see inventory reports if you're keeping inventory. On purchases, it's not enough that a transaction went through your bank for Amazon. They'll need to actually see the Amazon receipt. And then of course you want to always make sure you have a solid business purpose to be able to explain for every single one of your business transactions you're claiming. And now the most important thing in an IRS audit is to make sure that you are not going to get audited again. So you got to think the IRS is a business. They're trying to make money. They want to be profitable. They don't want to be just this pit of the government that the government sends money to and they don't get money out of it. So when you're being audited, they're trying to get money from you for how much more than to pay for more than the amount of time that they're spending on you. And so you want to provide all the information that they're requesting. And there are some things that the IRS will allow you to recreate, but you want to make sure you want to show them that you reported everything correctly, that there's no penalties or additional taxes for them to collect. If they come and they audit you and your books are solid and your records are complete and your business reasons are thorough and accurate, then they won't be able to disallow any expenses. They won't be able to add in any more income, and they won't be able to show that you owe any more taxes, and they won't be able to give you any penalties. And so in that scenario, they've now spent time on you that they didn't make any money from, and they consider that a loss. And they think that touching you, coming after you again, is going to do the same, and they'll lose it again, and they won't be interested in auditing you again. And so that has got to be your strategy there. So if you do have that IRS audit letter show up in your mailbox, we highly recommend not to complete the audit yourself. Remember, these agents, that this is their job. They know all of these different laws back and forth, and they know what they can come for you, and they know what people that are going about themselves, mistakes they'll make, and what things they won't be able to know for. And so you want to make sure you've got a professional who specializes in IRS tax audits. Now, not all tax accountants do, not all CPAs do. So you want to make sure you find one that specifically specializes with these IRS audits, that they've got their strategy in place and that they'll be able to take care of you from the beginning to the end, and know everything and have a plan for every single thing that's going to come and happen. All right, and so that's going to be the end of this presentation. I appreciate you joining us. And so again, there is our phone number and an email address to reach out, and our website at the bottom. Again, my name is JD, and so if you need any help with an audit, or even just making sure your bookkeeping is taken care of and your taxes are done in a way that's going to keep you safe from an audit, feel free to reach out. We do bookkeeping services, we do tax prep services. We also have different levels of our bookkeeping and taxes services that we include audit representation in. And so because we know if we're taking care of your books, we know it's going to be taken care of well, and an IRS audit will be easy to handle if we did your books. And so we will include, if you do get audited for a time period that we're doing your bookkeeping for, that we will represent you for that audit free of charge. And we know that you'll be safe. And so, all right, thanks again, and have a wonderful day.